Hey, this is Matt from InvestiQuant. Today is Tuesday, July 14th, 2020. And this morning I'm going to show you one of the bias alerts that will likely be in play for the session. However, I do want to mention we do have a couple bias alerts that are in play today, or likely to be in play at least, that are conflicting on their biases. So this top one up here does show a bit of a long bias. Historically, it's based off of getting several consecutive filled gaps, and it points to the upside when opening in the prior day range. But we do have some conflicting information, so I'm just going to show you one of them, and I'm going to show you the one that is down here at the bottom because I think this one is more obvious to people when they look at charts, so I don't know which one is better, but this one is what I see when I look at a chart. I see yesterday closed in the bottom 25% of the range in a strong market. So a weak close in a bull market. If I click on this icon here, you can get the description, which says if opening above the prior session close following a close in the bottom 25% of the daily range, and the prior session closed above the 10 and 200 day simple moving average, historical odds have favored closing lower than the open by 4:15 p.m. Eastern time. So this is based upon closing weak within the range like we did yesterday in a bullish environment. Historically, in the ES, that's happened 144 times. The win rate, 47%. Profit factor there, 0.68%. And if I click on this button, we can look at the back test. And here we go. So this is the results of going long at 9:30 a.m. Eastern time, exiting at the close 4:15 p.m. Eastern time, when you gap up after a weak close, defined as closing in the bottom 25% of the daily range and also above the 10 and 200 day moving average. So historically, you can see the equity curve here has just been dripping lower for many years. Win rate 47%, average loss bigger than the average win. So overall, it has been a fairly weak pattern, although the win rate's not super strong. So there's not really a large directional bias to it. Historically, the average losses have made this equity curve start going much lower because of the difference there. Now, what I want to do to this is, because this is kind of a really obvious looking pattern. If you're looking at the chart, you see this candle that's closing near the lows. What I want to also add to this is if I come into price patterns, I can say yesterday made the highest high of the past 20 days. So I can come to this new highs section and I can add this extra piece of information, and we can look at that as well. Because yesterday we did make a pretty significant high before reversing. So let me hit that and add it to the test and view results. That changes it up a little bit. Looks like the win rate gets a little bit weaker when we do that. Sample size does lose quite a bit of samples. It's down to 59 now. Win rate went from, 47 down to 42, so a little bit weaker. Same average loss to average win, showing that the average loss is quite a bit larger than the average win. So this has still been a weak pattern, even when the prior day makes that highest high of the past 20 days, which kind of creates a reversal-like pattern where you're poking above highs and then closing at the lows. So historically, that pattern has been fairly weak. So hopefully you found that interesting. And like I said earlier, there is some conflicting data. We do have other alerts that are pointing to the upside, so not as clean of a day as we get at times. But hopefully you found that interesting. Good luck, and we will